a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about cybersecurity ETFs. Now we know that Russia-Ukraine crisis has been front and center for investors and markets lately because of huge geopolitical and economic implications. And Russia and Ukraine, as I mentioned last week, they are major producers of oil, natural gas, many agricultural commodities, and industrial metals, as well as fertilizers. So those areas have seen a boost, as well as safe haven assets have risen past few days, and I talked about them in last week's video. Now, Russian currency and ruble and stocks, they have absolutely cratered because there are huge implications for the Russian economy. Now, late last week, stocks had rebounded because the sanctions which were imposed on Russia, they were not as draconian as earlier feared. But over the weekend, the US and the Western allies, they announced some more aggressive sanctions that could potentially financially cripple Russian economy. So that is why stocks are under a little bit of pressure again today. And cybersecurity stocks have been surging over the past few weeks because many experts have warned about the possibility of cyber attacks by Russia in retaliation to Western sanctions. Now, cyber attacks, in fact, have been a part of this Russian war strategy against Ukraine. And last week, Ukrainian Defense Ministry, their army, and some state banks were hit by cyber attacks that were worst in country's history. And we have seen many recent cyber attacks in the past few years that have been linked to Russian entities, including the very high-profile Colonial Pipeline cyber attack last year. So Russians are capable of carrying out massive cyber attacks, and that is why the possibility of such cyber attacks against US institutions and other global institutions has been rising over the past few days. But the pandemic in general has accelerated the need for digitization, and as the world becomes more interconnected and more digital, then the digital transformation increases the risk of cybersecurity breaches and threats, and that is why there is increasing need for cybersecurity products and services for the long term as well. So I will be highlighting 4 cybersecurity ETFs because ETFs are the better way to invest in this industry, because there are many small companies with a lot of growth potential, and some of these companies have been beaten down with other high growth stocks over the past few months. So let's take a look at these 4 ETFs. The first one that I'm highlighting is the first ETF, which was launched in the wake around a very high-profile cyber attack on Sony, which was linked to North Korean hackers. The ticker symbol is IHAK. It invests in cybersecurity technology and service companies. It follows a modified equal weighting scheme, 60 basis points expense ratio, and has 1.8 billion in assets. To learn more, you can go to the quote page on Zacks.com, read our research report articles, and using the link, you can go to ETFMG webpage for this ETF and learn more about it, including what it holds. So you will see Cisco, Palo Alto, Checkpoint. These are the top holdings in this ETF, but nearly equal weighted because of the modified equal weighting scheme. The second one I'm highlighting is actually the biggest cybersecurity ETF currently. It is by First Trust. The ticker symbol is CIBR. It holds cybersecurity companies which are in the technology and industrial sectors. It follows a liquidity weighting scheme, modified liquidity weighting schemes, which makes sense because some of these companies are rather small. Same expense ratio, but with 5 billion in assets, this is the largest ETF in this space. Again, you can go to the quote page on Zacks.com, and from there, the First Trust web page, learn more about this ETF. And I show these web pages because you should always know what you're investing in. So take a look at the holdings and the weightings before you decide to buy those ETFs. Palo Alto, Cisco, Accenture, CrowdStrike, Checkpoint, these are the top holdings in this ETF, but you will see a different kind of weighting scheme. Now, the third one that I'm highlighting is actually the cheapest in the ETF in the space, and in full disclosure, I own it in the ETF investor portfolio that I manage. IHAK by iShares invests in cybersecurity, hardware, software, and services companies. It follows a market cap weighting scheme. Cheapest with 47 basis points in expense ratio and 512 million in assets. Again, you can go to iShares webpage and see what it holds. You will see companies like Checkpoint, Citrix, Juniper Networks, and Palo Alto Networks, but slightly different weighting scheme again. The fourth one that we are taking a look at is by Global X. Very interesting ticker symbol, BUG. Cybersecurity, hardware, software, and services companies. It also follows a modified market cap weighting scheme, has an expense ratio of 50 basis points and 955 million in assets. Again, you can go to the quote page on Zacks.com and the external homepage. Global X is known for its thematic ETFs, so it has some good research on its website. So if you're interested, you can learn more about the long-term potential for these companies. Checkpoint, Palo Alto, Fortinet, these are the top holdings in the ETF. Now, on the last slide, I have the comparative performance versus the S&P 500 index for these ETFs, and you will see that since some of these companies were beaten down in the last few weeks, not weeks, months, because they are high growth potential companies and they are rather small companies. So you will see that while the First Trust product had a performance similar to the S&P 500 index, Hack, the first one, is the worst performer, down about 4%. The Global X product is up about 9%, and the iShares product is about flat over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.